Hey everybody, Jason Rivera here from ValueInvestingJourney.com to start the next case study. After the last case study ended on Armanino Foods, stock ticker AMNF, I asked you all to suggest some companies you'd like me to take a look at for the next case study. And Amit, I wanted to send a shout out to Amit, who recommended the next case study target, which is King Digital Entertainment. Stock ticker KING, King. Okay, the first thing you'll notice here is the market cap at 4.4 billion. It's much bigger than most of the companies I look at, but I don't really care. Yes, I normally stick to smaller companies, but I will look at any company of any size and consider investing in them if they're undervalued, if they're safe. If they produce a ton of cash, those types of things. So the first thing you notice here is the market cap 4.4 billion. All right. Oh, and then no dividend yield as well. Right now they don't pay a dividend. All right, next go to the growth and key ratios page. Revenue has been growing, which is good over time. Gross margin's very good at almost 69%, and operating margins are excellent at consistently in the 30% range in the trailing 12-month period in the last 2 years. The next thing you'll probably notice is the lack of financial information with King. I usually like to look at information going back at least 5 years, 10 if possible, but King is a new company, maker of Candy Crush and Farm Saga, those types of games, and they just IPO'd on the stock market in 2014, in March 2014, so their information doesn't go back as far as I would like. It's not a red flag, nothing to worry about here. It's just more of a personal bias here that I like to see more information. No payout ratio, no dividend. Book value per share has actually gone down since 2014. Again, not in a huge way and nothing to be concerned about here. But again, I would like more information over time. Nothing else to look at up here that caught my interest. Scroll down the page a little bit and we will go to ROIC and ROE. Both are incredible. At the trailing 12-month period, both are 89.3%. I look for anything over about 10% on each on a consistent basis, and these go way above what my threshold is. And you notice though their ROE and the ROIC are both the same. That means that King has no debt. It funds its entire operations either with equity. Let's go back up. See if they've issued a bunch of shares, and they haven't. So they're either funding their business with funds from IPO, the cash flow, or their operating margin, which all three are very likely since their margins are outstanding. All right, next go to the cash flow page on the key ratios. And we will see the free cash flow to sales margin, again, is outstanding at 27.6% in the trailing 12-month period. I look for anything above 5%, and anything above 5% means the company is producing a ton of cash related to its amount of sales. And this particular margin means that for every $1 in sales that King does, it produces almost 28 cents of free cash. That is very, very, very good. So that means that's why they don't require any debt. So their overhead in the digital games market isn't really high to my knowledge, other than hiring the talent to make the games and advertise the games and build the games. There's not a ton of costs, and most of these games are very profitable. All right, next, moving on to financial health. You notice here that the cash and short-term investments of King make up 55% of the entire balance sheet. That means they're incredibly safe company, especially when you consider they don't have any debt. which I already talked about, but here just to illustrate, debt makes up 0% of their balance sheet right now. So that means they're an incredibly safe company, and the only way they could go out of business is pretty much if over a period of time their games stop making money. And that would be over time. They couldn't go bankrupt overnight or anytime soon, even with a large drop in their subscriber base. Normally here I would look at the cash conversion cycle, but you notice there are no numbers here for the cash conversion cycle. Not a big deal, but it's not a big deal here because the company's new. The games don't require a ton of money to make. The large amount of expenditures, let's go back to profitability and check their expenditures. Cost of goods sold are only 31.3% of their entire sales, so that is excellent. So that just proves right there that they don't use a lot of money to develop these games, and that's why their margins are so high. Operating income, the company's only $4.4 billion, and they've created their operating income in the last trailing 12 months was $776 million. That's incredible for a company of its size. And on a relative basis, that means that they are undervalued. Again, here are the total cash, $661 million versus a market cap of $4.4 billion. And you'll see one thing of note here: taxes payable. They have $257 million worth of taxes payable. I'm assuming that is from the IPO or options or both, but that's something that we will need to look at and find out why this number is so high when we dig into the financials. Cash flow statement, again, producing a ton of cash related to compared to their market size. In the last 12 months, they produced $616 million in free cash against a market cap of $4.4 billion. Let's go back and see what their sales are. Go back to the key ratios tab, and they produced $616 million in free cash against sales of $2.2 billion. So that illustrates how high their free cash flow to sales is. Let's see, anything else? I think this is it for this part of the case study. Their margins and earnings yield, safety, balance sheet safety, everything else that I look at on a preliminary basis, King has surpassed by a wide margin. So this case study will continue into the next part when we will dig into the financials and look at why, or among other things, find out why taxes payable is so high compared to its size. Until next time, my name is Jason Rivera from valueinvestingjourney.com. Let me know in the comments if anything else caught your attention or something else that I missed in my quick preliminary analysis of the company. Until next time, thanks Amit for the suggestion. Bye.